Hey everyone, welcome to Orderflows.com. My name is Michael Valtos. I'm the founder of Orderflows.com. In today's session, I'm going to talk about stacked imbalances and ratios and how using them together you can improve your trade entries, resulting in more profitable trades. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so we all know what a stacked imbalance is. Stacked imbalance is where you have three or more imbalances stacked on top of each other. The Orderflows software will draw a zone out. You could adjust it. I have it drawn out 5 bars on my charts. You could adjust it to more or less. It's up to you. Now, not all the time does a stacked imbalance work. So, ideally you want to find the times that they do work. Why are stacked imbalances important? Well, it's important because it's showing you an area on a chart where buyers are being aggressive in the market and actively lifting the offer or selling into the bid at a strength of 400% or more. It depends on your settings of the software. You could adjust it to 300%. You could adjust it to 1,000%. It doesn't matter what your settings are. What you want to know is when you have a stacked imbalance, when it's going to be more, have more potential to be successful. This is an example here. You have a stacked imbalance, but it failed. The continuation didn't happen. And, had you gotten a long off of it, you would have lost money. You want to find the instances, you want to find the instances and take the trades where they're going to have a higher potential for being profitable. Okay, so, let's find a few more cases and sort of go through. Okay, here you have a stacked imbalance. And, it did work out. It did go in the favor that you want to go. It's a stacked buying imbalance. So if, you gotten a long off of it, you would have made money, which is what you want to do. Then you have another one here. Again, it looks like it's, successful. Then you have another one here. It didn't. It failed. It would have, you would have taken a loss. So, how can you determine, whether one is going to work over another one? Well, that's where the ratios come in, and it's a way to refine your entries. I talk about these ratios in the software, in my book, in my trading course, and they are important. So here's a case of three stacked imbalances in a relatively short period of time. 2 worked, 1 failed. Okay, so why did it fail? Well, obviously something happened in the next bar that didn't confirm the buying imbalance. When you see a stacked buying imbalance, what you're looking for in the next bar is, the sellers or the buyers. If it's a stacked buying imbalance, you're looking for the buyers to reappear and show their strength and move the market higher. Okay, so this first one, in the second bar, it opens up quite high, but you don't have a ratio that you like. You don't have a blue number. It's black there. In this example here, you got the stacked buying imbalance. Now you have a ratio. You have a single print. You have a ratio above 30. It's a blue number, and the market rallied. Okay, then here at the high, you have another stacked imbalance, but this time the market turned and sold off. So when you have, basically what I'm trying to get at is when you have a stacked imbalance, a stacked buying imbalance, and in the next bar you have a small print, single print, ratio bounds low, look to trade in that direction. When you don't have it, you don't have anything, you just have a normal number, be hesitant. And it's not to say don't take the trade, but I'd rather take trades that I have a higher probability of it working. Now, obviously, one thing you want to be careful of is when you have a stacked imbalance and you have a ratio going in the opposite direction to the imbalance. So in this case, you have a stacked buying imbalance, and it looks kind of nice. You're looking at 4 price levels, 6 price levels, but then in the next bar, you have a ratio bounds low up here, which is indicating that's bearish. So you got a stacked buying imbalance, which is bullish, but then you're looking at a bearish ratio up here. So be careful. The market did sort of go sideways to lower before turning around to go back up. But I mean, is it worth the risk trying to get into a trade like this? Okay, so now I'm going to switch to a minute chart, a 5-minute chart. Normally I don't usually trade minute charts, but I know a lot of my software users do trade minute charts. And, the same things, that I look at on a range chart, I'm also going to be looking at a minute chart. So, I have a nice stacked buying imbalance here. But then the next bar, it's a single print, which is a bearish single print, which is telling me, be careful about getting long in here. I mean, eventually, yeah, the market did turn around, but, I don't necessarily know I want to fight against this, against a ratio immediately after, a bearish ratio immediately after getting a bullish signal. I'd rather wait for, the more optimal signs. You don't have to be looking to trade every single print. So, a little bit later here, the market is selling off, and boom, you get a nice stack selling imbalance, and, immediately in the bar after it, you get a single print. So you have your confirmation of the selling imbalance. The market came off. You're seeing another, a couple of selling imbalances. You got stacked imbalance in this bar. Then you're seeing more selling in here, and you got the single print. Realistically, you could be getting short in this third bar anywhere in here between 1995 and 96. You're getting short at 95 or 96. Market trades down to below 91. I mean, just barely, but at 91, you're looking at 4 or 5 points, in the move. If you could get a confirmation with a single print or a small print or a ratio bounds low, I find that those are much more potent as far as trade entries. 30 minutes later, you get a buying imbalance, a stacked buying imbalance, but then again, there's nothing in the ratio following it, in the bar, in the ratio following it, that tell you to get long. So that concludes this short video. Basically what I want to get at is when you have a stacked imbalance, look for confirmation in the ratio in the bar following it. It'll cut down on the amount of trades you have, and as a result, I think it will increase the amount of winning trades you have. I mean, if you could eliminate losing trades and increase your your winning rate, that's what you want to do. Like I said, it's not about taking 10 trades a day, and I have only 5 winners. Would you rather have 5 winners and have 5 trades and 4 winners? What you want to have is more high percentage trades rather than making the amount of trades. So, if you can use, order flow to confirm your entries, that's the idea. That's the whole idea behind trading with order flow is, having better entries, having better trading opportunities. So again, thank you for watching this video. To learn more about trading with order flow and the software that's used in this video, be sure to visit my website, www.orderflows.com.